Last week, the S&P 500 increased 1.68%, the Nasdaq rose 1.73%, and the Dow Jones climbed 1.96%. Stock prices resumed their upward trend as traders priced in corporate tax cuts that the new Trump administration has committed to when it takes office in January. Gold and silver prices jumped as the conflict in Ukraine escalated sharply. Platinum and palladium also climbed as markets awaited whether Western economies would implement further sanctions on Russian metals exports. Oil prices and natural gas prices also increased amid concerns that Ukraine could target more oil and gas facilities in Russia. The big stock news of the week was that chipmaker Nvidia posted above expected results, but Tesla also received news that the U.S. administration will create a framework that could ease the regulatory path of fully self-driving vehicles to market. Reports suggested that Iran could respond to Israel's attack on October 26th in the coming days. Stocks are also in focus since a high period of consumer spending during Black Friday, November 29th to December 2nd, could influence positive sentiment. It's a busy week for U.S. data with the inflation indicator, PCE price index data, GDP figures, and Fed meeting minutes all released on Wednesday. In Europe, crucial German inflation figures will be released on Thursday. Amazon's stock price decreased by 3%, with some traders choosing to cash in after the online retailer hit an all-time high the previous week. In October, the tech company posted better than expected earnings and revenue expectations. The company has already begun, November 21st, December 2nd, its lucrative Black Friday sales, which are some of the busiest retail days of the year. Amazon Web Services represents Amazon's most profitable division, which provides AI and machine learning services to businesses and is a leader in the cloud market. On December 2nd to December 6th, Amazon will hold its AWS reInvent event, where it could reveal more about future plans and product development. Boeing's stock price climbed just over 6% by close of business on Friday, bouncing back from a 2-year low hit in the previous week. The aircraft industry has seen difficult time in recent years, but with travel demand back to normal levels, airlines are renewing their fleets, leading to increased demand from the second-largest global aircraft manufacturer. The aerospace and defense market is also forecasted to grow 8.2% annually, representing a boon for the company. Corporate tax cuts planned by the future Trump administration could also enable Boeing to invest in production. Crude oil prices jumped some 6%, hitting a 2-week high after escalation in the Russia-Ukraine war underpinned the commodity. After the missile range of Ukrainian targets was extended, Russia altered its nuclear doctrine, lowering the threshold to mount an attack on a state involved in a war against it. Last week also saw reports suggesting that OPEC could discuss delaying its scheduled output increases from January at its OPEC ministerial meeting on December 1st. Gold prices increased by 5.6% to an almost 3-week high amid a rush for safe haven instruments last week. The escalating war between Russia and Ukraine was marked by the first use of a long-range ballistic missile attack upon Ukraine by Russia in response to an earlier decision from the US, UK, and France to permit Ukraine to use longer-range missiles to attack Russia. Natural gas prices jumped to a 2-year peak of over $3.6 and finished 3.2% higher by week's end. The commodity was underpinned by an increased threat to energy supplies in Russia and colder than average weather in the United States. Colder temperatures in Europe increased concerns that there could be gas shortages in Europe by the end of the winter season, which could trigger additional demand for natural gas in the coming period. The EUR-USD pair fell by 1.1% last week, reaching a 2-year low as persistent concerns over the European economy's health weighed heavily on investor sentiment. Europe remains concerned that the incoming Trump administration could apply tariffs to its goods, while Germany, Europe's largest economy, remains beset by a political crisis that will lead to fresh elections early next year. King dollar, meanwhile, continues to grow in value as market participants scale back the possibility of multiple interest rate cuts next year, owing to lingering U.S. inflation.